In a vault in Zurich, a central banker is buying gold. Not a lot, just a little. Every month. Quietly. He's not panicking, he's not making headlines. He's doing something almost boring. And that's exactly the point. Because the biggest financial shift of our lifetime isn't going to look like a crash. It's not going to be a headline that breaks the internet. It's going to look like this. Small, slow, deliberate. The kind of thing you only notice once it's already happened. For 80 years, the US dollar has been the operating system of the global economy. Oil is priced in it. Debt is issued in it. When a country in crisis needs to buy food, fuel, or medicine, it needs dollars to do it. Not because the dollar is magic, because everyone agreed, decades ago, to trust it more than anything else. That agreement is starting to wobble. Here's why this matters right now, and not 5 years ago. In 2022, the United States and its allies froze about $300 billion of Russia's central bank reserves overnight with a signature. For most of the world, that was the moment the dollar stopped looking like a neutral tool and started looking like a weapon. If your money can be frozen because of a decision made in Washington, then holding that money isn't just a financial choice anymore. It's a risk you're taking on someone else's behalf. Central banks noticed, and central banks do not forget. So let's break down how this system actually works, because most people have never had it explained without jargon. Every country needs a reserve currency. Think of it as the currency other countries agree to hold on to, so they can trade with each other, pay off debts, and defend their own currency if it starts to collapse. For most of modern history, that currency has been the dollar. Around 57% of all foreign reserves held by central banks worldwide are still sitting in dollars today. That sounds dominant. It is dominant. But rewind to the year 2000, and that number was closer to 72%. 72 down to 57. That's not a headline. That's a 15-point erosion spread quietly across 2 decades, one small decision at a time. And here's the part that should make you lean in. It's accelerating. Let's follow the money, literally, because the evidence isn't in speeches, it's in vaults. Central banks bought more than 860 tons of gold last year alone. Poland, Kazakhstan, Brazil, Turkey. Not exactly a coalition you'd expect to coordinate on anything. And China has stopped even reporting its purchases, which, if you think about it, is its own kind of statement. You don't announce the thing you want people watching closely. Gold now makes up around 30% of global reserves, up from 13% less than a decade ago. Gold pays no interest. It sits there. It does nothing. And central banks are stockpiling it anyway. Why would you hoard an asset that earns you nothing? Because unlike a dollar sitting in a US bank, nobody can freeze a bar of gold sitting in your own vault. That's not economics. That's insurance. Now here's the mechanism most people miss entirely, the part that sounds technical but actually explains everything. China built its own version of the international payment pipes that move money around the world called CIPS. Think of it as a backup road built next to the highway everyone currently uses. For years, almost nobody used it. It was a formality, a hedge. By this year, that backup road was carrying transactions worth roughly $270 billion a month. That's not a hedge anymore. That's traffic. And the BRICS nations, Brazil, Russia, India, China, South Africa, and their newer partners, are now settling around 2/3 of their trade with each other in their own currencies instead of dollars. A decade ago, that number was under 20%. So here's where hype and reality need to be pulled apart, because the internet loves a dramatic story, and this isn't one. The hype says the dollar is collapsing, that some new currency is about to replace it any day now. That's not what's happening, and anyone telling you that is selling something. The dollar still settles 88% of all foreign exchange transactions on Earth. U.S. Treasury markets are still the deepest, most liquid, most trusted debt markets that exist. Nothing else comes close. Not the euro, not the yuan, which still makes up less than 3% of global reserves, despite being the currency of the second largest economy on the planet. So no, the dollar isn't dying. Here's the uncomfortable truth instead, and it's actually stranger than collapse. The dollar is still the king. But the kingdom is quietly building an exit door just in case. That's the real story. Not a coup, a hedge. Countries aren't betting against the dollar. They're refusing to bet everything on it. And that shift, small as it looks today, has consequences that compound. Because here's the mechanism underneath the mechanism. The United States has run trade deficits for decades specifically because the rest of the world wanted dollars, and the only way to get them out into the world was for America to spend more than it earned. Economists have a name for this tension. The country printing the world's reserve currency is required to run deficits to supply it, which slowly undermines the very trust that currency depends on. It's a currency built on a contradiction that works fine until enough people start hedging against it. And people are starting to hedge. U.S. federal debt has climbed past 130% of GDP. Foreign ownership of U.S. treasuries, once an easy sell to any central bank on the planet, has been quietly declining for 15 years. None of this breaks the system tomorrow, but every basis point of trust that leaves doesn't come back for free. Reserve currencies don't fall. They get replaced gradually by the next generation of central bankers who simply stop reaching for them first. It took the British pound roughly 30 years to fully hand the baton to the dollar after World War I. Nobody alive at the start of that transition believed it would actually happen. It felt impossible, right up until it was obvious. So here's the question worth sitting with, long after this video ends. If the dollar's dominance took decades to build, and every empire before it believed its currency was permanent right up until it wasn't, what does it actually look like when the shift finally becomes visible? Because history says you won't see the moment it happens. You'll only recognize it once it already has.